Hello, everyone. Welcome to the market update for Tuesday, January the 18th. Again, before we get started, if you do have any questions during the week, make sure you send those to Jerry@traderspro.com. I'll be happy to answer those for you. As far as getting started with the market update, there are times in the market where, despite the many years I have of experience and the different analysis that I can make, and reading price action and things like that, there are times where the market doesn't make sense to me, or is doing something that doesn't quite make sense. Usually when that's happening, it means the market is doing a little bit of a lower probability move. But as I've mentioned a couple times in the last few updates, that happens, and that's what creates a market. Again, if anyone could know exactly what the market was going to do, you wouldn't have a marketplace. So how do you deal with it when that happens? Well, I think one of the most important things that I've learned over the years is to definitely not to overtrade in those conditions. Don't do a whole lot. In fact, do a lot less in those situations. The reason for that is that, if you start trying to, for instance, if you take a little bit of a loss because the markets are doing something, you took a position like I did, expecting the market to rebound, and then it didn't, and you're losing a little bit of money. There's a tendency to want to make that money back very quickly, and so you start to gamble a little bit more, or take bigger risks or bigger chances to try to get back the money you lost. The problem with that is that you're taking greater risk in a more uncertain environment when there isn't as much certainty as to the direction. And what usually happens is that you compound the problem. You end up losing even more money and digging a bigger hole for you to have to dig out of. So again, the key point is recognizing human nature. Human nature is to try to get it back right away. You want to resist that. You want to focus on, kind of doing the opposite of that, which is to slow everything down. And one of the things that I learned, again, making that mistake early in my trading career, trying to get it all back right away, is that I had to ask myself the question, why do I need to get it back immediately, especially in these conditions when I can't have I don't have a strong, confident feel of the direction that the market's moving in. Why can't I wait a few more weeks, or wait until things become clearer to try to work on getting that money back, or increasing my account at that point in time? And again, it doesn't always mean that we're operating from a period of a deficit. It could just be that you've made a lot of profits, you've given some of them back, and now the market is in a uncertain type of condition. And so again, that's when we talk about kind of trying to do things opposite of human nature. This is one of those situations where human nature is impulsive. It wants you to jump in and try to do something right away, solve the problem right away. And the best thing to do is to just kind of be patient and wait. Another thing I've noticed over the years is that these types of conditions don't last very long. Now, this particular one, the way the market's been behaving is kind of baffled me a little bit for a couple months now. But which means it's a little bit longer than normal for me, at least, that it's lasted. But I've had periods like this. I've had periods longer than this. I remember a 6-month period in the market where I couldn't figure out what it was doing, and it seemed to be doing everything opposite of what I was expecting it to do. And what happened that year is I didn't do a lot of trading that year. I really backed off. I was very cautious and selective in the trades I was getting into, and And I learned a great lesson from that. I didn't dig a big hole during that period of time that might have taken me years to dig out of. So again, I wanted to just kind of set the stage before we start analyzing things, because I'm going to be, for one thing, I'm going to be doing today is I'm not going to be recommending anything. With the way, and I'll show you this when we look at the charts, the way things are looking. Again, I don't see a high probability direction right now, and in fact, things could get a lot worse from where we're at right now than a lot better. And if that's the case, I don't want to be buying anything. The other thing I'm going to be doing is getting to a bigger cash position of the portfolio. There's a couple of trades that we'll probably stop out of today. There's others that I'm going to go ahead and just get out of, just because they're giving a little bit of a near-term bearish signal. And there's others that we may be getting out of in the next few days. I'll show you what I'll be looking for to get out of those. And I wouldn't mind getting to a full cash position because this thing could start to get a little bit ugly, and we'll point that out. Now, as far as the direction alerts here, from the direction alert standpoints, we're not overbought. We never reached that extreme reversal risk range, and it's still possible that we have a little bit more downside, and then it rebounds and does push towards those extreme range. But we never really got to that real extreme condition that you would normally expect a bigger correction from. But as I mentioned many times as I was going through that, I've talked about how it doesn't mean it can't happen. And this might be one of those situations where we have a significant correction from a non-overbought condition, or even a condition where the market is kind of hyper bullish. It's definitely possible. And I think it can relate to something I've been pointing out for a number of months, which is the sentiment still remaining so high. On each of these sell-offs, we're just not getting any fear coming into the market, and maybe it's going to take just a big jolt, a big sell-off from a non-overbought condition to get that fear in the market that can create a bottom strong enough to be able to rally from. But again, momentum's not showing anything extreme. Breadth isn't showing anything extreme. That sentiment, again, despite all the selling and despite breaking below key lows that I pointed out last week that we had to pay attention to, we're not getting a break in sentiment. There's just not fear there that this market could sell off further. And again, so buy-sell ratios, they're not showing anything extreme yet. The sentiment indicator is not. But what has got me concerned? Well, let's take a look at the watch list here. We had this very strong bullish reversal that took place back here on January the 10th, which was it was not this last Monday, but the Monday before, the week before. That was when the market had opened lower, had this big sell-off, and it came roaring all the way back and managed to close higher than where it opened. There was also very high volume on that reversal, meaning that there was a large amount of activity, and in this case, that's showing there was a large amount of buying on that reversal because it managed to close higher than the open. So on that type of reversal, what is the assumption there? Is the assumption that it's the average Joe trader that jumped in and started buying right there? No, because the way that trading day went, the average person that doesn't really know what they're doing or know how to recognize anything would have been panicking that day. They would have been selling that day. That type of reversal is the smart money. It's the big institutional traders stepping in and buying at that point. And so because of that, because we had that strong bullish reversal, those professional traders were confident that the market was going to go higher from here. that made this low very significant, and this is why I pointed that out last week. I said if we violate this low, look out, because that means that those professional traders were wrong, and they're going to have to start selling. They're going to start getting out of those positions, and I think part of the selling through here has been those traders recognizing that maybe they were wrong, and they're starting to get out, bail, and get out of those positions. Now, there was another bullish reversal back here. Maybe that one's even more significant because it's right at a breakout area. This was a previous high. It broke out to a new all-time high right through here. It came back and retested that right through here, and it held. Retested it here, and it held. Maybe this is the spot that's the panic area. If we break that, the panic area is going to kick in. I don't know. We'll see. I figured for sure it was going to be this low right here. But as we broke below that low today, we haven't really just accelerated. We've just kind of been holding right there and back and forth a little bit. The VIX spiked up this morning, but as we'll look at here in just a second, we take a look at it, not in a huge way, when you look at it in context, it's not like there's massive panic. If sometimes when you're on financial websites or you're listening to CNBC or something like that, you can sometimes, when the market is really in a state where it's the professional traders are fearful, you can kind of sense that. You get some of these traders that come on during the day and they look a little bit stressed, a little bit concerned. I'm not seeing that. So what that's telling me is that this area that I thought was going to be very significant and really be a turning point in the market just isn't showing that right now. Now, what does that mean? Well, the problem with that is that when you're not seeing that acceleration of the selling, that panic kicking in, it means that maybe we are going to find support. Maybe we do find support down here a little bit low. I don't think we're going to find it right here because we've already broken it. So you start to look at the next level, the next support area, which is down here this is about 450, 452, somewhere in that area right there. 451. We'll see if that ends up holding as support. But I can't imagine that if the buying is strong and the buyers are confident that this wouldn't have held right here. I would have expected that you'd have higher lows. We had a little bit of a bullish reversal day on Friday. I was wondering if maybe we would rally off of that, possibly. There was decent volume on Friday behind that move. I'm going to say today, I'm going to act like today's Monday because it's just it always happens when there's a holiday week. It screws me up because it's not normal. This is the first trading day of the week. It's felt like a Monday all day today. And so luckily I remembered I had class today, which sometimes can happen with those holiday days. I forget when my class schedule is. But so again, if I refer to today as Monday or something like that, just understand I do know it's Tuesday, but it's the first trading day of the week, and it's the first trading day since Friday, and looked like maybe we could possibly reverse off of that. Didn't come close to it today with the gap down. Not only did we gap down, but we gap down when we're trading lower. That usually it's not showing any sign of a reversal today, which means that I would assume that we're going to head lower. Now you combine that with let's take the volume bars off here. You combine that with the Dow. The Dow significantly dropped below that January 10th low, blew right through it. It traded right at it on Friday. Again, looked like maybe it was going to rally off of it, but it failed. You look at in fact, the only one that hasn't broken it is the NASDAQ 100, but it's getting close to it. It's probably going to end up breaking below that January 10th low. Probably the most concerning, and the reason why I'm turned a lot more bearish, because you might look at all that and say, well, Jerry, you've already pointed out there's a little bit of support there on the S&P. Why can't we find support there and rally off of that? Probably the biggest key area that I told you to keep an eye on is the Russell 2000. And we're going to go out to that longer term chart. We're right at the lowest point of this support area. And although we haven't technically broken it yet or completely broken it yet, especially since there's a lot of area. This is kind of an area that we're looking at. We're not looking at a specific line or the exact price point. It's just looking very likely that we're going to be breaking that support area. Typically, you don't run into a support area as strongly as we've run into this one, and it holds. Usually, you'll start to see bullish reversals. In fact, if we zoom in a little bit more here, you can see what I'm talking about. Well, let's go to a 6-month chart. You start to get you got an indecision candle right there at that low. You've got a kind of almost a hammer formation at this low, but not today. We're right at near the lows of the day. We come a little bit off the lows of the day, but this is a full-on bearish candle. Typically, when you have a full-on bearish candle right at this key support level, it usually isn't going to hold. Usually, it's going to break through it. What this is starting to look like to me now, as it looks like it's becoming less likely we're going to rally off this point. Hold on. Excuse me. It's looking to be like this was the impulsive move up, the breakout. This is impulsive down. This is corrective, and that we're about to have another impulsive move down. It looks to me like we're completing a trend reversal, and we're going to start seeing small caps fall apart right here. Now you say, well, then why aren't we just shorting everything, or why aren't we just, why aren't we just taking a strong bearish outlook? Well, because we are still right at support levels, and in all these I just showed you on the S&P, there's still uncertainty there where we could still bounce a little bit here. But I would assume with any bounce that we get, any sort of if we do get a little bit of a rally off of this, let's zoom in now to the 6-month chart here on this. If we do get a rally off of this today, off of these lows today, then it will probably just be a rally that sets up for another move down. Meaning it would probably be a little bit more choppy as it tries to rally. And once you get a bearish reversal candle here, you can see an example. You had a hammer candlestick formation, rallied the next day, and then you had a bearish reversal candle right there. That's what I would look. If I was going to short the market, that's what I would look for. See if you get a little bit of a bounce, and then get a bearish reversal candle, and then that would probably lead to where we break through and drop. Although it could just break through tomorrow, but what would really make us more concerned that there's a lot more downside is that VIX. Do we start to finally see that break in sentiment? Do we start to see some panic in the market? Remember, I go back to the direction alerts. That sentiment indicator, every time we kind of pull back, we just don't see that sentiment indicator show any sort of concern. The complacency is so high. There's no fear entering into the market. Not that it has to get all the way over here to where there's fear, but it's not even getting into the trending range where there's concern. I mean, the high range is complacency as well. This is extreme complacency, and we're with despite what I just shown you, the indicators telling us that there's no concern. In other words, that professional traders, because this is what the sentiment indicator is reading, it seems like professional traders aren't really concerned that that the Russell 2000 is going to break that support area, or that the S&P is going to break its previous breakout area. Now, again, I don't know when that fear is going to show up, but I almost feel like now we're going to have to see it before we can trust any rally. We've got to see something that, because what creates the buying that can push the market higher is there's a belief that things have come down far enough to where things are on sale or a good deal. And I think what's happening right now is that, the prices haven't come down far enough that create that fear that creates that bottom, that creates that anticipation that things have a lot further they could rally once they stop dropping. And so what you get is the market can rally, but they're short rallies because, that expectation that things can go much higher just isn't there. It's almost, so let me give you an example of what I'm talking about. When you see a trend that's all the way up in here, you can see how far it's come. You can see it came all the way down from, let's say $10 down here, just to give a price example, all the way up to, $50, let's say. You can see how far it's run. So psychologically, if this thing pulls back a little bit, it drops down to say $40, $45 or something like that. That looks like it's a little bit on sale, but compared to where it's been right now, you can see how far it's run. So if it starts to move back up to $50 again, or even goes to 55, there's a concern that things have gone very far. This doesn't look like, these little pullbacks don't look like a good sell or a good entry point or a good buy or a discounted buy. Meanwhile, if you end up having a big pullback, this thing comes all the way back to $20. Visually, you can see that it went from 10 to 50. Now it's back down to 20. You start saying to yourself, boy, if this thing just gets back to $50, that's a $30 gain. I can see where there's a lot of gain right there that I can make. And so what happens is that you're willing to pay $25 for that stock easily because you still think you have a lot more money you can make. It can get all the way up to 50. At $30, you're still an aggressive buyer because you can see that it can still get to 50 and make a decent profit. The problem is, though, look what happens when you get up to $45. What happens? Well, now you start to say, okay, we're almost back up to 50 again. I might only be making another $5 here. I'm going to be a little bit more picky on if this thing jumps up to $46, I'm not going to be as anxious to go pay that extra dollar because from a perspective point of view, my potential gain isn't as great as my risk. And so I'm not as willing to pay that extra dollar. Down here, you might be willing to pay an extra $5 like it's nothing. But up here, you're going to be a lot more picky about how much more you're going to pay for the stock, and so it starts to resist that movement higher, and that's what we're starting to see overall in the market. I think is that resistance to move higher. So we need that bigger pullback. Obviously, that's going to be created by people panicking. They're going to be selling out, and I'm losing. But then it'll get down to a level where now, you look at it back down here at 30 and you're saying, boy, it could get back up to 50 again. That's what can spark that aggressive buying and really cause the market to move up day after day after day. Because psychologically, there's a feeling that there's a lot more money to be made. And so you're willing to pay the higher prices so those prices go up faster. Hopefully that makes a little bit of sense there. But that's part of understanding price action and trader psychology there. And I think we need to get that bigger sell-off before we're going to rebound stronger. And like I said, I thought we'd have probably another push higher to create that, but it's not looking that way now. It's looking like we'll probably end up breaking this and moving lower. And because of that, I don't want to have a huge I don't want to be all in the portfolio. I want to be out as much as possible, so that when that panic kicks in and when we start bottoming out and when we're down around $30 and there's that potential for it to go back up to $50, that's when we want to go in heavy. Not that we're going to time it perfectly, but go in heavy in here where we get that potential for that big return as it starts to go back up again. So that'll help you understand a little bit of why I'm looking to do some things I'm looking to do in the portfolio today. All right, so that's the indexes. The bond market. Another reason why the market is selling up today is the bonds keep dropping, which means the bond yields keep going higher. That's kind of freaking the market out a little bit. Now we got down in this area last week. We talked about how we should get a little bit of at least a little bit of a bounce in bonds because we were really oversold. We were down. We were at the far left side of that extreme reversal risk. And even with that bounce, we didn't get, we at the peak of that bounce, we started moving to the sell area right here. But now that it's moving lower, we're getting back into that extreme reversal risk. But clearly, we're in a downtrend in bonds. It's pretty obvious. You have impulsive down. This is corrective. You have impulsive down. This is more corrective. We got impulsive down. And because we're not at the far left side of that extreme reversal risk, there's still potential for bonds to continue to move a little bit lower. One thing we can start to do is back out a little bit, see if there's other support areas we can start to keep an eye on. It broke this support area right here. And, there's a little bit of potential support right about this 140 area right here, previous resistance, a little bit of support right here. You've got another key area down here. And you just start, I don't know which of these areas could end up being support. I think this was a major low for it to break below. You had higher highs. This was a higher low right through here. Now you've gone to a lower low with that break. And this definitely looks impulsive overall as it's trending down like that. Now, it could be getting ready for at least a near-term bounce. If you were to apply Elliott wave here, that's probably wave 1, wave 2, wave 3, wave 4. And when this is done, that could be into wave 5, in which case you should probably see a little bit of a bearish ABC pattern, which would rally back up a little bit. Maybe it rallies back up and to this area support into here, but then it's probably likely to roll over and have a little bit further to drop. At least with this, the way it's acting right now, I would expect bonds to continue to move lower, which means that bond yields should continue to move a little bit higher, which again is going to be a headwind for the market. It would probably mean that the market has a little bit further to drop based off of that. But you can see here, though, that you could also see the market try to rally a little bit in the near term. Maybe bond yields drop a little bit, bonds rally a little bit, market rallies a little bit, but maybe that's just setting up for another move down. That's why I wouldn't be looking to short anything heavily right here. See if we get a little bit of a bounce and get a bearish reversal candle or something like that, and then that would be a better sign to short. And again, I'm not saying you have to short. That could also be a signal just to be getting out or going to cash in that type of situation as well. Gold, again, gold's been all over the place. I really don't want to, gold's been in a sideways range, and until it starts acting like it's trending, I'm just gonna. I'm not going to try to predict these short-term movements back and forth because they really haven't shown any consistency or any follow-through. Just not something you want to be trading right now because it's not moving very strongly in any particular direction, up or down. Oil has been clearly up. It's been one of the only sectors that's performed. Really, the only sector that's held up the portfolio for our purposes. But you are getting into extreme reversal risk up here. You have a little bit of a spinning top candle formation. That could change. The market's not closing right now, but if that's the way it looked at the close, or if it was lower, if it came all the way off the highs and was near the open of the day, that would look like a little bit of a potential reversal candle or at least an indecision candle that could lead to a potential pullback or reversal. So even the strongest performing sectors are starting to show a little bit of well, not weakness yet, but a little bit of indecision that could lead to weakness. This would definitely need confirmation. It could rip higher off of an indecision candle still, and so I'm not saying that you would just go ahead and just get out just to get out, but that is something to keep an eye on, that you're getting into that extreme range. And it's also showing you that it's becoming a crowded trade. It's the only sector that's really been working consistently. So guess who's in a lot of oil stocks right now? Just about every fund manager is piled into oil because it's the only thing that's working and the only thing that's showing a consistent uptrend. Well, at some point, and it could be showing that right now, at some point, everyone that wants to be in the trend is already in the trend. And then what happens? There's nobody left to push the price higher. No new buyers left to push the price higher. And so what happens is it has to start pulling back and selling off. And if that coincides with a market panic sell-off, you start seeing the market sell off in a panicky way, you can see this pull back significantly or sharply. Maybe not significantly, but at least sharply initially, as sellers prevent those profits from disappearing. So it is a little bit of a danger area, and if there is a panic sell-off coming, oil is going to be part of it. It's because when it's outperformed, it means most of the money is in that sector, and it'll likely come out of it if panic kicks in. Now again, panic hasn't kicked in yet. I'm not saying that just jump out of oil, but be prepared, because if you are in a lot of oil stocks, that's what will start to happen. If that Russell 2000 breaks that key support level, S&P breaks that key support area, you'll probably start to see that sell off pretty quickly. The dollar has started to rally. I mentioned this when we had this little drop right through here. I said sometimes what will happen in these sideways moves, you'll get these really sideways moves. And you hear me say all the time that whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to go after it's done moving sideways. And that is the general case. It is something whenever I see a sideways move like that, ultimately it should move higher. But sometimes what can happen is, especially if you're stuck in a real tight sideways range, is you need something to spark the move higher. So sometimes you'll get a little sharp sell-off below that range, and then it'll kick in the buying that brings it higher. And that might be what's happening here. You were basically in the sideways range until this big gap down. You immediately had a bullish reversal candle, and it's moved up very sharply since then. Ultimately, it looks like we put in a higher low now. We should see the dollar move to a higher high. We'll see if that happens, but I would assume that this was the correction and that now we're in an impulsive move up on the dollar. Now, that doesn't mean that we can't have little pauses along the way, little steps along the way. So again, if on Thursday we're looking at this and we pull back and fill in this gap a little bit, that's definitely something that could happen, and it's part of the process of kind of stair-stepping there. But ultimately, I think we're looking like we're in an impulsive move up and should continue to move higher at that point. You got impulsive down here, you got impulsive up. Those are characteristics of a trend reversal. It looks like we're reversing back into an uptrend. The VIX, again, it's up today, but look again context-wise, we're still not up as high as we've been. It's just not that panic yet in the selling, but it could be building towards that. One thing you could look at is each of these little spikes we've had have produced lower highs. We're getting real close to maybe getting to a first higher high right here. We've got kind of an even low down here, and maybe we start to see a potential trend reversal taking place, which would mean if the VIX is trending higher, it would mean lower for the market, at least for the S&P. Chip stocks still look like they're in a corrective phase. This still looks corrective in this big run up right here, but much like the dollar, remember you had that real long sideways move in the dollar. Could we get a market sell-off that causes the chip stocks to drop sharply, maybe down into this breakout area right here, and then get a bullish reversal? and start trending up again, that's definitely a possibility, and it actually looks more likely that something like that would take place, based on the context of everything else we're looking at. Dow Transports, this is looking, more and more like like this first move down was wave A. Wave B will tend to be an ABC pattern. This could be wave A, wave B, wave C to create that wave B. And this could be wave C, which at the very least should get back down to this previous low. Could even dip a little bit below it, but that would be kind of a target area there. If you back out a little bit, I can show you. So here's kind of that sharp move up. This could be wave A, wave B, wave C. Now, if it can hold in this area right here, you also have what looks to be a possible cup with handle formation. I mean, the transports look like they're pretty bullish. I mean, if it can rally back up and break out again, it would really be bullish. But in the near term, it could even come down and retest these lows before moving back higher again, and still be considered a kind of a consolidation through here or what have you. So Bitcoin's moving lower as well. Looks, again, acting like a downtrend, lower highs, lower lows. Today it's gone to a lower low. It's just confirming that downtrend it's in. We're looking right here to see if maybe there's a little bit of a bullish reversal that could take place. But again, this is why we don't just bet heavily on just a bullish reversal candle. It could just be that's leading to a bounce, which leads to another move lower. What you would have been looking for here is maybe an extended impulsive move up, and then when it pulls back, it'd be a little bit more corrective. That's a stronger signal of a trend reversal potentially taking place, and this is just showing a continuation of that downtrend. So it's showing me that Bitcoin hasn't bottomed yet. It still could have further to drop. All right. Like I said, I'm not going to go over any new trades. We'll see on Thursday. Thursday's class is the stock specific class, and so if there is something I see, I don't anticipate I'm going to want to get into anything even on Thursday. But I mean, I understand that some of you, want some trade ideas. You might still be wanting to make trades, and so I'll try to make sure I have something on Thursday that you could potentially trade. But I don't see, unless something happens very dramatically in the market, I don't see me wanting to jump in any strong way just yet. I will point out on the indexes here that one thing we'll keep an eye on is these buy-sell ratios of the indexes. You can see they're getting very low. You're seeing more sells than buys in many situations, or at least as many sells as buys. You've got in the Russell 2000, you've got 487 sells compared to 411 buys. You're below a 1.0 ratio there. So now this can get worse. You can get really, really low ratios here to where there's twice as many. You can get below 0.50, which means that there's twice as many sells than buys. And maybe that's what the market needs, is to get to that point before that aggressive buying can start to kick back in. Question: why use GBTC when it's over-the-counter stock? I'm not saying you're gonna trade GBTC. Grayscale is a company that allows you to buy and sell allow you to kind of buy and sell Bitcoin like as an exchange kind of, or as a proxy. And so we're only looking at, let me go back to that here. I'm only looking at GBTC as a chart that we can look at to view Bitcoin. And I only added this recently just because there's a lot of people that are trading Bitcoin, and that and there's not a Bitcoin, like a Bitcoin stock, except for some of these proxy stocks. So I can't show you a chart of Bitcoin. There isn't a chart of Bitcoin on Traders Pro that I can show you, and so we're doing it by proxy. Now, there's others I could probably use. Coinbase I could probably use. I choose to use Grayscale, but yeah, I understand it's an OTC stock, but again, all we're really paying attention to is the chart on this for those that are making decisions on cryptocurrencies. And I say cryptocurrencies because what's been happening a lot lately is a lot of the cryptocurrencies trade together. You know, if you're trading Dogecoin or some of these others, that they tend to move when one is up, usually the others are up, and when one's down, usually the others are down. So this is just to add something to the market update for those that are trading Bitcoin. I don't trade Bitcoin, so or I'm not really into cryptocurrencies, but I understand that some people are. I've had some requests for analysis on crypto, and that's about as far as I'm going to go because I'm not trading it on a regular or any basis right now. I'll look at the charts and what the charts are showing me. But anyway, that's why I'm using Grayscale as part of the market update there. All right, real quickly here, let's get into the portfolio. Now, some of these I was probably going to get out of in the morning, but I thought I'd wait till class to go ahead and make those decisions. Now, on LPX, my stop is below this low right here, but I'm going to go ahead and get out. I'm looking for any reason right now to go get to cash. I'm going to take a little bit of a loss on this, but I want to get to cash. This looks like a little bit of a head and shoulders pattern. It looks like the way it dropped today, it looks like it's probably going to break that stop loss low there. And if it doesn't, moves back up again, I can always get back in again. But I really want to lighten up on a lot of the portfolio. Let me go through the portfolio, and I'll show you the ones I'm going to be getting out of, and then the ones I'm going to stay on. I'm not going to use the signals. I'm going to be using just the candlesticks here. So LPX, I'm going to go ahead and get out of. LPI, it's an oil stock. And again, it's not near our stop loss, but what I'm going to do on this one is, if it gives me a close below the low of the previous day, I'm going to go ahead and get out. Like I said, I'm looking for reasons to get out. I want to go to a cash position. I think there's more downside. Guess what? If I'm wrong and the market rebounds then I can jump back in again. There's no big, what's the big deal there? I just see more downside risk and potential for bigger losses than upside reward potential right now. But I also don't want to just go ahead and get out just to get out. I mean, it is up. It hasn't broken. It hasn't traded below the low of the previous day yet. It's possible that today's bearish reversal candle could reverse back up and keep going higher. But on any of these that look like they are close below the low of the previous day, I'm going to probably get out of. So I'll give this one maybe another day. But if it closes below today's low tomorrow, I'll probably get out. Just so you're aware of that. Same with Tesla. Tesla's hasn't moved below yet Friday's low yet, or doesn't look like it's going to close below Friday's low. It's trading up here, but I don't like this lower low it put in, and potentially that it could go lower from here, and especially if the market starts selling off. So that'll be one that I'll be watching. That maybe I get out of in the next day or two if it closes below the low of the previous day. NSC, I'm going to get out of. It's trading below the stop. I believe it's trading below, unless my stop is down here. But even then, this doesn't look good. I want to get out of that one. UPS, it actually did trade below the stop. The stop was below here. It has a little bit of a reversal candle today. That was one I'll probably wait, just because of the hammer formation here, pattern there, and the potential it could bounce a little bit off of that. I'll give it another day to see if it can, or I'll give it a few more days, see if it ends up. But if it ends up closing below the previous day, I'll be jumping out of that one. CLR, it's higher today, but it has a bearish reversal candle. This is an oil stock near the previous highs right here. Again, this is one that I'll see if it closes below the previous day as an entry, a very tight entry or exit strategy. And then the last one is SM. This one, it was trading at the time before class, it was trading below the low of the previous day. I was going to be getting out of this, but it looks like I'm going to give this one another day too to see, because it's not, unless again, a lot can happen in the last hour. If it does end up getting to the lows of the day today, and it's going to close below the low of the previous day, I'm going to go ahead and get out of this one as well. This is another oil stock, and remember the USO was showing a little bit of an indecision candle, a potential reversal candle. If you look at all of our oil stocks, they all had bearish reversal candles today. Now, it doesn't mean that means they have to drop off of those, but again, I don't want to give back the profits I've gained on those, and I don't want to have losing trades on all these trades I'm getting out of. I do want to preserve some profits, and so if it gives me a close below low the previous day, I'll probably just take that, get out. And anyway, so there were going to be 4 stocks. Because UPS was another one that was trading. Like I said, it was right at the lows. It was right down here before class when I was making the decision to possibly get out of this one. It's rebounded in this last hour or so. So I'll give that one another day. But I am going to get out of LPX and NSC. And I could wait to the end of the day on those to see if they rebound, but I don't think they will, or at least not significant enough for me to want to stay in them. So I'm going to go ahead and exit LPX right here. Current price is at $71.07. So ultimately, I'll end up with about a $200 profit from where I got in. It's not much to brag about, but at least it's positive. And we're not giving back everything that we've made while in the trade. And then NSC, our stop was at 277. We're at 274, so we definitely want to get out of that. 274.17. We're going to lose about $300 on that. So what we made on LPX, we're going to give back on NSC, which is fine. If I can kind of get a wash, and it's not a complete wash, I get it, but what I'm really wanting to do is build this cash position. And, we're still down a little bit in the portfolio, but if we get as big a sell-off as we might possibly get here, then I'll be in a good position to buy in at that point and get back positive in the portfolio pretty quick if that were to take place. So I was planning on getting out of 4, and I might still. We'll see how SM and UPS look at the end of the day. If this slides back down below Friday's low, I'll get out of it today. If not, then today's low will be important tomorrow. If we drop below that low, I'll probably stop out. And this is one, SM is one that we're hoping to preserve some profits on. We got in at 34.22. I mean, if I were to get out right now, we'd we're right at we're higher than where we got in, so it'd be a small profit again, but it'd be at least a profit. Wouldn't be that way on UPS, but all right. So that's kind of what we'll do for now. But those are all ones I'll keep an eye on, and who knows? By Thursday, maybe I'm in total cash. Might be possible in total cash at that point. All right. That's all I have. I wish it was more of a uplifting update today, but you have to kind of take what the market gives you. But again, to recap a little bit, the lesson maybe I can teach today is to be patient. If you have a little bit of a drawdown with the selling that's taken place recently, you don't have to try to get it back right away. In fact, it's better that you don't try to get it back right away, that you wait until we get a better condition to get it back. And then also to recognize that as much analysis as we can do, sometimes the lesson we learn in these situations is that no matter how much we learn and how much we study price action and chart patterns, we still can't know exactly what the market's going to do, or it won't always do exactly what we think it's going to do. This is always a reminder of how important trade management is and money management. What gets people into trade management, money management problems is the confidence that they know what's going to happen next, and they think they know for sure what's going to happen next, and so they risk more than they probably should. And about the time you end up doing that, I can tell you, I don't know what it is, Murphy's Law or what have you, that it's right when you decide, the minute you finally decide that you're so confident a move is going to happen that you go all in, is the time when the lower probability outcome takes place, and it hurts you pretty bad. So, all right. So anyway, we'll see what happens. Keep an eye on those support levels. We'll see if they hold or if they break. And again, I'll address that on Thursday if we see if we do break it by Thursday, and what happens by then. We'll be able to talk about it, and I'll give you some more analysis at that point that might be helpful going forward. All right, thanks everyone. Have a great week. Bye now.